We've already started to see a spillover. It was one thing when this was just affecting manufacturing. It's a relatively small portion of the global economy. But these spillovers that the new IMF chair is talking about have started to occur. We've seen it not only in the PMI for services, we've seen it now maybe beginning to show up in employment, but we've also seen it in retailers. I'd note that container ship bookings of products from China to the U.S. or China to Europe have really slowed. They're not showing that usual surge they get around this time of year leading into the holiday shopping season. That means already we're seeing this trade concern bleed through manufacturing profits into actual service sectors like retailers. Could be a blue Christmas.
Yeah, I mean, freight data is certainly one of those forward-leading indicators ahead of other types of data points, Kevin. How closely are you watching freight numbers right now, and is that factoring into your take on the markets through the rest of this year?
Yeah, as you see, global growth is clearly taking a hit, and it could be a mixture of things. But business confidence is very important, and having a lot of uncertainty over trade is going to weigh on things like capital spending, which feeds back into profits. Now, the good thing has been that profitability has held up and business profits have been strong. That's been a very big positive. The tick down in interest rates throughout the year has helped give a lift to valuations. But unless we get some clarity in terms of where we're going on global growth, and it looks like things at least begin to start to firm up, there's going to be potential for some chop here. And every time we have headlines on trade, the market is going to move up and down based upon those headlines. So unless there's a new impulse into the economy that lifts earnings, lifts stocks, unfortunately, the market's going to be really jostled about based upon what kind of headlines are coming. And lately, it's been a lot about trade.
So, Jeffrey, what's the Fed to do? I mean, we're going to be getting comments from the Fed chairman Powell later today. There does seem to be an increased expectation from a market standpoint that we're going to get a cut at the end of the month. Do you fall in that camp? And if so, is it enough to help stave off slowing economic growth and thus help propel the markets?
It's possible we get a regular. We'll certainly likely see one more, at least by the end of the year, whether it's next month or in December. We'll have to see. No, I don't think that's the issue. It isn't tight financial conditions or high interest rates, as it often is late in the economic cycle, that are the problem. That's not it. Look at Germany. It's on the cusp of a recession, yet interest rates are below zero across the entire curve. I think it's fiscal policy we need to see enacted more significantly here around the globe. There are some increasing signs. We're starting to see that in South Korea and France and the Netherlands and elsewhere. We need to see Germany endorse that. We need to see other major countries come on board with that. That would be a more powerful tool than merely further lowering interest rates from here.
Kevin, fiscal policy here in the U.S., how likely would that scenario be, especially given the fact that there does seem to be so much political turmoil? And then, of course, you got these elections next year as well. What's factored into the market here?
Well, you've already have a fairly hefty amount of fiscal policy working its way through the system. Remember, we had some fairly significant tax cuts a couple years ago, and that is showing up in terms of higher deficits. I think we're running something like a $1 trillion per year kind of deficit at this point. So the United States has relatively high debt levels versus where it was 10 years ago. We've got relatively accommodative fiscal policy. Monetary policy has done a lot of the work for the last 10 years. So really what you need is just some good old-fashioned confidence, business investment. That can really go a long way in terms of energizing profits. But until we get some clarity on trade, it's reasonable to think that businesses are going to hold back somewhat, and that's going to create a little bit of a damper here.